This is the first event that I've actually hosted since 2021 before the C word. So prior to that, I used to host these events month in, month out. Used to be at Alton Hall, for those of you who know where that is, it's just in Leeds. And I want to get to a point with this again where we start hosting these on a regular basis so that you guys can come along and learn. And again, it don't cost you a button other than fuel and time. So for those of you who've never met before, my name is Bradley Marchant. I'm 34 years of age, and I started this industry at quite a young age in regards to like getting into entrepreneurship, making money. And I saw when I was at university the ability to start making money online. So prior to that, prior to being at university, I was typically involved in sports. I used to play pro for Huddersfield Town. I used to sprint for Leeds in England. And then females came into the mix prior to this one. So basically when I used to play for Huddersfield, I was, in the first team, I was getting paid. It was great. I was getting paid to sprint. And what I slowly realized there, that unless you're a top tier, then the money in that is not necessarily going to be great. So when I went to university, I started studying events management, Spanish, sport, and tourism. Can't speak a lick of Spanish, even though I live there. And I don't run events other than this anymore. So what I slowly realized was that all of the stuff that I'd done up until them years was pretty much worthless for me. And I got involved in, for those of you who are in the network marketing space or you've seen network marketing, I got involved in a company called Herbalife. But who by show of hands here has heard of Herbalife? Okay. I did phenomenal with that company, right? I made a lot of money. I was the guy that they used to call a full kit wanker. I used to go to university in an all green lime tracksuit with a beanie hat on, right? My lecturers knew me as the guy that just used to try and push powder. It wasn't as profitable as that, but I still made good money. So over that 4 years, I got involved heavily at the start of that in personal development and starting to study what people were doing that were making money. So I started to study Andrew Carnegie, Earl Nightingale. I started to study Bob Proctor, Jim Rohn, the people who were kind of paving the way in the entrepreneurial world. And I slowly realized that I can make a hell of a lot of money by building communities. So that is pretty much where we are today in regards to, what we're doing within Traders Kingdom, the gold trading community, is building a group of like-minded people who want to do something together. So when I was obviously in the school days, my mum and dad conditioned me from a very young age to learn sales. So I was going to school with chipped Xboxes, chipped games, I was going to the car boots on a Sunday, I was getting the games, I was copying them on the copywriter. This is highly illegal, by the way, so I was a kid, what are you going to do? But I was going to school and I was making probably £200-300 a week as a kid. I used to take that money, I'd buy football boots with it, I'd buy Pokemon cards, and I became a bit of a weird gamer and making money online. So when we look at the entrepreneurial world with how I was with Herbalife, I then got involved with the coffee that you're drinking now, a company called Organo. This was 7 years ago. And I built a team with that of 18,000 people from 32 different countries. And one thing that I realized with that was it doesn't matter whether you're black, white, male, female, tall, small, got money, no money. People love to be a part of something. So when I got involved in that, I started looking into, this is really, really weird, I started looking into the coffee prices on the stock exchange. And you can trade coffee, you can trade orange juice, you can trade all this other stuff online. And I was like, that's moved pennies. But how are people making insane amounts of money on it? So I started looking into the financial markets, how all of that works. And then I came across a company called I Am Academy. So for those of you, again, I've been in network marketing for 14 years. This was my initial introduction to it. And I slowly realized with that, I could educate myself, I could learn, and I didn't have to, necessarily rely on other people buying my products, buying my services. So at this time, I was a director of a sound and light company. And with that, I was making probably 45, 50K a year plus commissions. And it just was never enough. So what I was doing was month in, month out, I was taking all the spare money that I had and I was putting it into the financial markets. So who here has not got a MetaTrader 4 account yet? 2, great, that's a good start. I used to put it into that. I set up with a broker called Vantage, and basically I was putting my money into there at the end of every single month. Whenever I got paid, it just got flipped straight into there. However, I might as well have just been burning that money, because for, I reckon, maybe 6 months straight, I must have blew probably 60, 70, maybe 80K, just gambling. Like, who here can relate to that? Who here has put a trade on that they know they shouldn't have placed? Who here has placed a buy when it should have been a sell? They've put the wrong stop loss in. They've adjusted the stop loss. No stop loss, even fucking worse, right? And again, if you're trading in here, you'll know how it feels. Fell asleep, yeah. Wi-Fi went down, I started pressing all these, but like there's a million excuses when it comes to placing trades. I did every single one of them. So when I got involved, that was the reason I got involved and why trading, because I realized that it's a skill set. So like anything else, I focused on football, I made it even though I got released. That's another story. Focused on sprinting, made good money. Focused on, you know, the business side of things, always made good money. So for me, I realized with trading, it's something that banks, governments, hedge funds do every single day. So why can't I do that? And then I looked into it, and up until probably about 10, maybe 12 years ago, an average person like us couldn't do that. The barrier to entry to get involved in the financial markets was heavy. You had to come in with a lot of money. So obviously when we look at that there, like that's why we set it up so that you can have the Telegram community. You have, you know, the group there to be able to learn from. The boot camp's going to be finished, the school community. So everything there is for you to learn, to educate, to grow, so that eventually, whether it takes you 3 months, 6 months, 12 months, 18 months, it took me a long time. You know, like for me now, I talk about this on all the calls. Who's been on one of the Wednesday calls that I do? You guys are good. Okay. See, the ones that aren't on it aren't here. It's nice. So with them, the thing that I talk about on there is there has to be a breaking point that gets you to a point where you think, I have to stop doing that. And for me, I've shared this before of the reason why, you know, I lost the money that I did. I took a £500 account, gambled it to 1,000, gambled it to 2, gambled it to 4, gambled it to 8. Eventually that hit like 40-something thousand dollars. I'd just split up my ex at the time. And I was like, you know, fuck this bitch. Right? I'm going to make it on my own. I'm going to do it all. My goal was to get that home run of a 40K account, because I've took it from X to Y. I wanted to get that to 100K because there was a house that I'd seen. I wanted to buy it like a weirdo with no down payment, but I could have took that money and invested it. And within 2 hours, who here has seen their account blow yet? Who's blown an account? Put your other arm up if you blow more than one. Right. I would say stand up if you blow more than 3, but you'd all be walking out by now. So that was the breaking point for me, where I realized that things had to change, because over that 6-month period, if I'd have just kept my discipline, if I'd have just kept, you know, the emotion out of it, and I'm going to talk about that a lot today, the emotional side of things, the psychological side of things, like my habits came from, it wasn't necessarily from me. It wasn't what I've, you know, taught myself. It's what I've grown up with, my friends, my family, my granddad, my people around me. So a lot of the times, this is where trading becomes a bit more of a psychological game, is if you look at what actually the reasons are that you're blowing your account, that you're over trading, that you're over leveraging. Come in, lad. You late? What is it like? There's been snow or what? Nice to see you, Pete. But yeah, so like you'll get to a point with this where there has to be something that triggers that. There has to be something that makes you think like, why am I doing this over and over again? Why am I placing them trades? Why am I over leveraging? You know, why am I placing 10 trades when I should only place in 1? So what I want to do here is just look at the things on this. You know, some of you have seen this presentation before. I want to run through it really, really quickly again, but remove your emotions out of trading as quickly as you can. Like just by show of hands, who here has placed a trade and they instantly felt a little bit of something and they don't know what it is yet? They don't know whether it's like fear, guilt, emotion, sick, whatever it is. Like that was me all the time. Every trade that I placed, I got to a point where I was like, I'm going to close this real quick because I don't want it going down anymore. Then I'd close the trade too early and it'd go and hit TP 96 and I'd end up, you know, missing out on a hell of a lot of money. So do not trade that you're more than you can afford to lose. Who here has done that? Who here has put more money in than they can afford to lose? There we go. You can lose everything you put in. We've all experienced that, right? And you're fully in control of your money. And this is something that I want to touch on again because it's on the next slide as well. you are 100% in control of your own money. So even when we send out a trade idea, you still are in control of that. Whether you buy or sell, whether it hits stop loss or take profit, and you cannot go broke taking profits is one thing that I'll talk about a lot in this. So to begin with, if you feel that emotion kicking in, you can always close them trades. Even if it's a couple of pound up, couple of pound down, like my emotion used to kick in heavily over the cost of a bag of quavers. And I would go spend £400, £500, £600 on a night out and not think anything of it. But yeah, I'm looking at my MetaTrader while I'm driving with one hand and I'm texting with the other, like, who's at the wheel? Like, looking real quick. You guys can relate to this because you're doing it as well. So I had to delete MetaTrader. I had to get things off of my phone because I realized with that I was the reason why I was blowing my own account from an emotional standpoint. So again, because this is recorded, anything we say is not financial advice. I'm not a financial advisor, and past profits do not guarantee future results. And again, you're in control of your own money. So the things that I'm going to cover real quick on this, who here is new to trading within 3 to 6 months? Shit, okay. 6 to 12? Who's veterans 2 year plus? Okay, we've got some vets in here. Who has quit the job from trading? Okay, Scott, I like it. 2, I like it. So that just shows to me that there's little things out of this that are going to get you to a point where you can eventually make full-time money, because a lot of us will put goals in place where we want to earn 10 grand a month, we want to earn 15 grand a month, but there might not necessarily be anything around that. So obviously you guys get started with your broker. Most of you already done that because you already got MetaTrader 4 set up, so we can skip a few of this. What I've started to do is to put systems in place where when this starts to grow, as it will, like we started this with 10, 11 of us in a Telegram group, like some really close friends. And then eventually it's grown out now where there's 800, 900, you know, close to 1,000 people in there. So when it comes to the get started part, we've got that in there. You guys have already downloaded MetaTrader. Who here has typically trading off the 1 minute to 15 minute time frame? Is anyone doing the higher time frame trades? Okay. Who here doesn't know what time frames are yet? That's good, that's good. So when you look at the time frames, and I'll go through this, I'm going to do a little bit of chart work with you guys as well. So this start bit here is more just to brush up on a few simple basics, but minute 1 to 15 is typically an area that you don't want to trade when you're new to trading, because the amount of movement that can happen in that short time frame, it can mess with your psychological side of things, it can mess with your emotions. So I typically trade personally off the minute 30, the 1 hour and the 4 hour time frame. So me as a personal trader, the kind of strategy that I've set up over time, for me personally, I start with what they call a top-down analysis. So I look on the higher time frames first, and then I break that down from daily into 4 hour. Does it still match what I'm looking for? Yes. Right, down to the 2 hour. Does it still match? Yes. Does it still match on the 1 hour? Yes. Then if I get lower than that and it gets to 30 minutes, 15 minutes, and then if we're at a point then where it doesn't match, that's where then I will take a deeper look into that trade and be like, right, what needs to happen from here to place the trades? So you guys, I'd say all of you are probably taking the trades at the moment. You're copying and pasting, so you don't necessarily need to dig into this. But this is where I really want to teach this eventually, because I want you guys to get to a point where your risk to reward that you're taking is insane. Like one of the gold trades that I took the other day, it was the exact same signal that got sent into the group, but my stop loss was 7 pips. So if it goes the wrong way, I'm out after 7 to 10 pips versus 80 versus sometimes fucking 100, right? So what I want to do with this is I want to eventually get to a point where I'm teaching all of you that are consistently turning up, that are consistently showing up, how to get to a point where you can break that down to a point where it's a 7, 10, 15, 20 pip stop loss. So that then when we do hit a 200, 300, 400 pip trade, you've also got the emotion to stay in that for that journey. Because what happens a lot of the time is we take a trade, we'll cash out at 30 pips because that's TP1, and then you see it go to 50, 100, 200, and your brain is telling you every 20 pips or 10 pips that it goes up, should I get in that again? Should I trade? Should I enter another trade? Should I enter another trade? You end up entering it, and it stops you out, then it runs again. So then you're in this emotional cycle and battle with yourself where you're like, man, should I be trading this? Should I not? Like, people are putting print screens in of wins, I'm losing. And all it is then is just the emotional side of it that comes to it. And I was that person. Every trade that I put on, I lost. everyone else around me seemed to win. And when I'm saying around me, I was spending time with people who were trading with me. So imagine going for coffee, they're all, fucking hell, who took that trade? Who's won? I'm like, I lost everything. Every trade's blown, every trade's gone, I've hit every stop loss, I've not won anything. They're there, you know, hitting TP3, TP4. I've lost 63 trades in that exact same time period. I'm like, what is going on? So for me, this is where I want to start teaching this, educating on it a little bit more, and going a bit more in depth. Stop loss to entry and top and take profit on charts. I'm going to go through that a little bit more as well. But for me, I'm very visual. So you can set this up on your chart, on your actual phone, to get to a point where you see where it says trade levels there. So you go into settings, in the bottom right-hand corner, click on chart, and then toggle on trades. So what this allows you to do is, because a lot of the time I used to look, how do people go in and modify their position so quickly when they don't know what their entry point was? So like, I'm then having to go on, click on trade, look for that. I'm like, right, entry point was 2684.25, right, hold it down, modify. You then, by the time that's happened, the trade's gone. So with this, if you can see where your trade levels are, you can see your stop loss, you can see your take profit, you can see your entry point. You can literally just click down on it there on the chart, hold it down, modify, and it's done within seconds, versus having to get your brain around it a little bit. So the terminology side of things, this was something that I struggled with at the beginning as well. I'm not very well versed in school, right? My missus takes the piss all the time. Not all the time, I won't bash her. She doesn't at all, actually. She's very, very supportive. But I'm very bad with English. So there's things that I don't understand in my brain. Maths, numbers, sick. I can get that charts all day long. So SL is stop loss, TP is take profit, short equals sell or down, long equals buy or up. Bearish is a downtrending market. How I always used to think of that there was bears attack down. Sounds a bit weird, but it's right. Bullish is an uptrending market. Lots is the amount you will risk per pip. Pip is percentage in point. These are the bits here that make us money. Lots and pips. So when you understand the amount of lots that you will trade with, the amount of pips that you're going to make off of each trade, I typically in my own trades have an amount that I will risk and that I want to aim for, as long as it fits in with my analysis. And the great thing with the trader that we've got right now is he trades the same style that I do. So when I look at the trades and I'm like, yeah, it's on point. The only problem is sometimes the way that this is right now, who here's noticed there's a lot of volatility lately on gold, right? Yeah. This is once in 4 years. This will not happen again until the next election, or we're having a war or something like that. You will see volatility a hell of a lot more now because, excuse my pun on this, it's a dick swinging competition out there right now. It's who's got the most power, who's got the most of this, who's got the most of that. So you're seeing banks, governments, hedge funds, volatility a hell of a lot more because gold is a safe haven. So gold, if there's ever anything going wrong in the world, banks, governments, hedge funds take their money, they put it into gold because they know gold will never go anywhere. So that's why you will see when Ukraine attacks someone or so-and-so attacks someone else or the US says this or the election does this, gold will spike. Once all that's calmed down, gold drops heavily because there's volume being pulled out of the market day in, day out. So as you start to see that, you can start to layer into your trades. So for me, I don't typically layer as much as I used to do. I used to layer into positions. So that means basically if the market's going the wrong way over and over again, as long as my stop loss is still in a good play, if I'm playing a higher time frame, I can layer into that trade until it's typically about 20 to 30 pips away from stop loss. So once it gets 20 to 30 pips from stop loss, that's when then I would stop layering in and I would look for key zones, which I'll teach you in this as well. So pips in this is just a change in the currency pair and it's identified with the big numbers. So this is when I made the presentation. Gold was at 2431. We're now at 2700. So gold has moved since I made this 3,000 pips, which is insane. Like that blows my brain a little bit, to be fair, because I didn't catch it all. And the lot size determines how much you're going to make. So the lot sizes are typically done here, where it says 1.00. And as we go through, I'll talk about this as well. We only trade gold in typically on this. We may be adding a few more currency pairs in that are USD based, just purely for the fact that the way that they trade with the euro and the pound, again, it's all in synergy. But the problem then is if it goes wrong on one of the pairs, it'll be like a domino. So we're going to typically just stay with gold against the US dollar. And the reason for that is, again, all the banks, all the governments, all the hedge funds of the system, they typically play that a little bit longer. So when we look at the pip side of things, who here doesn't know what a pip is yet? Just out of curiosity. Sick. This is what I want to do. I want to get past this bit. So risk management, we'll cover this a little bit. Because for me, when I understood risk in business, I'm a little bit more risk averse than I would be if I didn't have capital, if that makes sense. So when I first started in this, 1% risk for me, I wasn't asked about because I put the money in that I could afford to lose. So what I mean by that is even though I say on these never risk more than 3%, my average risk per trade is 5. So I will take 5% risk on my own trades because I'm happy that if I lose 20 trades on the bounce, my account's gone. I know my own results, I know my own stats, so I know that statistically that shouldn't happen. So again, you're going to have to come up with that what works for you, because someone the other day, I don't know if they're here yet, they placed 3 trades and their account's gone. So that's a 33% risk per trade. Like for me, that doesn't make sense. But if it works for you and your capital and you're happy to just keep chucking money in, I'll send you my PayPal link for that. Like, just keep burning money. I'll be the gift giver for that. I'll take all your money, it's fine. We'll just put it back into something else. But when I come to risk management, just take the account size, because people always say to me, Bradley, how do I work out my lots? How do I work out my risk? Just do 100, divide by that, is that. So if you look at your account size, divide it by 100, gives you the amount that is 1%. So then just times that by 3, 5, 2, whatever it is you want to do, and then divide it by the amount of pips at risk. So let's say, for example, it's an 80 pip trade that's at stop loss. You would do £80, divide by 80 would be £1. That was just to make maths really easy for me. So, but on this case, if it was £19.50 divided by 80, it would be 0.2. So it'd be 20 pence per pip. So it'd be a 0.02 per trade. So then you can get really quick at working out what your lot sizes are, what your leverage should be, and how much you're trading. So I always do it here to keep it super simple, just to make it quick when you're placing trades, because a lot of us will go to our phone and then we'll think, oh shit, I need to work out my lot size, I need to work out my risk, I need to work out this, I need to work out that. And you end up missing 7, 10, 15 pips of the trade before you've worked out your own lot sizes. So if you know you've got a £500 account, just do 0.05. If you know you've got a £1,000 account, just do 0.1. And then once the trade starts going a little bit, and let's say you've over leveraged a little bit, you can go in, modify, close off a little bit of your trade. So what you do with that, I'll just go back a few slides. You can hold down when you're on the trade on here. When you hold it down, you can edit this number here. So when you go into modify position, you can change that. Let's say it was 1.00. You could change that to 0.5, and it would take 50% of the position off. So it'll close half. So when you see us say take profit 1, take profit 2, take profit 3, and we'll say close at TP1, that doesn't necessarily mean close the whole position. Like, this is where for me, the wording side of things needs to be a lot stronger. Because if we have it where we close at TP1, the growth of your account will not, it won't grow. Because what will happen is if we have 2 or 3 trades on the bounce where we win, 30 pips, 30 pips, 30 pips, and we have 1 stop loss, we're back at square one again. So you have to get used to managing your own trade as it goes up. So I'll show you how I do that today. I have a system where before the stop loss, before the take profit, I set my zone on TradingView to send me a notification on my phone, so that then I'll get a ping through and it'll say trades 20 pips away from take profit. If it comes to that and it's already hit, it is what it is. I'm out of the trade, I've made money. So as we go through this, the entry types that we're going to start putting in are typically going to be buy limits and sell limits. So what this basically means is that we can start setting what we call pending orders. And at the moment, we're typically market execution or instant execution, which basically just means we're entering the trade straight away. So what we're going to start doing going forward is we're going to start putting pending orders in there as well, which will work with key zones of how I trade. So then this way, then you might put a trade on and only have a 15 or 20 pip stop loss, and you're waiting for that trade, and I'll show you exactly how it's playing out on today. How market closed on Friday was beautiful, because now it's coming up to a key zone on a 4 hour, which I'll share with you. And I want you guys to go away with this thinking, shit, it's the same. Because the market, when you get used to trading, it's boring. It's boring. It's the same thing day in, day out, week in, week out. The markets go up, the markets go down. The market breaks, it retests. It has support, it has resistance. It's got imbalance zones. You get used to just seeing that over and over again on every single time frame. Like, I've got close friends of mine now who I was trading with 6 or 7 years ago that trade with 3 to 5 pip stop losses. So you imagine on gold, when that goes and does 300, 500 pips, the growth on their account is insane, because they're used to seeing the same thing. And if it goes the wrong way, you're out. For me personally, who would rather be sat in a trade for a week and it being red? No, I'd rather be out of the trade as quickly as possible, because if it goes the wrong way, I don't want to be sat looking at my phone 65 times a day. That was not what I enjoy. I hate that. Like, the emotional anxiety that I get by looking at a trade, because I'm not trading with a £500 account, right? So when it starts to go into higher drawdown, it starts to go towards like 3, 4, 5, £6,000 down. My brain's thinking, shit, like, you could have just bought a watch. Like, what am I doing? 2 on the bounce, I could have put a deposit down on a house. 5 on the bounce, I've got a fucking nicer car, right? So when we start to look at the pending orders that we're going to put in, this will definitely help you. So when you look at the buy stops, we're not really going to do them, so we can skip. Sell stops, I don't particularly trade these. These two are good, however, for trading cryptocurrency. Because what you will see is if price breaks a high, it'll typically run. You'll see it on pretty much all time frames. So if price, so you see this blue candle here, if price breaks it, that was black, sorry, the black candle, it'll typically run. If it breaks this high, it'll typically run. If it breaks here, it'll typically go, so on and so on. So that'll make more sense when I do a little bit more, but buy stops and sell stops are very good for trading cryptocurrency and what we call breakout zones, but that'll come more. So the boot camp is going to have all of this in, and I want you guys to get to a point with it where you can watch that. It might be like 6, 7, maybe 8 hours worth of content, maybe a bit more, and you can go away from that and you can start to implement it. Because I don't just want you being professional signal takers, because it gets to a point real quick where you look at other groups, you look at other communities, and one thing you've got to remember is marketing is fantastic. Some of you who are in some of my other channels, you would think we've had a 6 million % growth over the last week. We've hit every take profit, we've done this, we've done that, but that's not reality of trading. Trading incurs losses. And that's why the banks, the governments, and the hedge funds don't trade with stop losses. So some of you are trading like banks with buttons in your account, right? So like, if you start to bring the mindset of how they trade, but you're looking for the key zones, that's the key. So a sell limit is when we're looking for the market to go up, hit a key area, and then come back down. A buy limit is the opposite way. We're looking for the market to come down, trigger us into a trade, and then go the other way. So as we do this, we get to a point with it where, again, you can go through it. Withdrawing, who here has not withdrawn from trading yet, ever? Who here doesn't put their hand up because they're lying to themselves, right? I was the person who was a professional depositor. I was the guy consistently putting money in, day out, week in, week out. I knew I'd over leveraged, I'd get margin called, I'd put more money in. Like, that is the worst email to receive when you get margin called. It just closes all your trades, even though you could have put more money in. So we want to condition good behavior. So the reason that I talk about withdrawing for me is if we can get you to a point where on a weekend, Friday, market's about to close, get into a position where you treat yourself based off of what you've earned. So if you've only earned 10 quid, you might not want to pull that out just yet. But if you get to a point where you're making 50, 100, 200, 300, 500 pound a week, like some of you in here are making good money. Like I get print screens all day long on the back end of the support channel of people making money. So the key with this is then to treat that and reward that behavior so it tricks the psychological part of it. And this is where, like, when I started studying the likes of Bob Proctor, that's where how we recondition our brain. Like I'm going to talk a lot today about subconscious mind, how his brain works, and the psychological part of trading, because there's only 5% of it which is actual charts, actual pressing buy or sell. The rest of it's up here. So if we know that and we start to reward good behavior, like what do we do with puppies? Kids. We give them a treat when they do something right. So then they get used to doing it over and over again. Sit, treat, great. Don't do this, treat, great. Kids, don't do this. They still do it, and then they'll eventually learn. So if we can treat and manage that behavior with us from the psychological part of things, eventually, when we come to pressing buy or sell, and we're telling ourselves, don't do it, shouldn't be pressing that trade, you're going to blow your account, but your brain goes, fuck it. It's going to work. This is the home run we've been waiting for. Look at that drop. And it goes the wrong way, right? So if we can treat that as a reward for ourselves, we'll get into a very good position where at the end of a week, take some money out, go treat yourself, go treat your partner, buy your kids something nice or put it to one side. But get into a point of spending that. Don't take it out and just leave it there. Take it out and spend it. So then that way then you treat that over and over again. So eventually, I say eventually because it took me 5 years, maybe 6, to not over leverage and not gamble. I still do this now. For those of you who don't know me, I'm a degenerate poker player and I love gambling. So this for me is amazing. But it just feels like I'm having a little flutter on roulette with money that I shouldn't be spending. So again, I will sit here and tell you the do's and the don'ts, but I'm also here to say as well that I am a normal human being and I do it as well. So a lot of you will message me on the channel, on the support, and it's like you're punishing yourselves. Like there's a lot of guilt there, there's a lot of fear there, there's anxiety, there's worry. Like, I don't know if he's here yet, so I can talk about this. He's not here, so I'm gonna say it. Like, someone that I know I'm very close to has lost nearly 150 grand. In 3 weeks. 3 weeks. But here's the not so fun part. Is he here? It's not. Oh, fuck it. This might have to be cut out. He took a loan out. Oh, no. Borrowed money from his friends and family. Credit cards. So guess what's now happening this month when there's no money there? He's having to repay stuff. So this is where that part starts to become not fun. But guess what? He took all the same trades that I did. I didn't lose 130, 140, 150 grand. So he has taken the gambling side of things, the fear, the anxiety, the worry, because he was already in debt. So this for me is where, like, this is why people say to me, Bradley, why on your Wednesday night calls do you only seem to talk about mindset? It's because that is the reason that people lose. It's not from pressing buy or sell, because the markets are going to do something anyway. So if you can get to a point with this where you're placing trades and there's no emotion, no fear, no worry, you will do very, very well. And that's where compound growth comes in. Like when people look at businesses and they understand, like any business people in here, they understand like EBITDA, they'll know the return of a business if someone invests into it versus what it's projected to earn and yada, yada, yada. Like that is what trading is. So if you understand that you've got an account balance right now that's 500, that's 1,000, that's 10 grand, 15 grand, 20 grand, whatever you're playing with, eventually, if you can just stick it around for 3 to 5% a week, 2 to 4% a week, or just scrape by at 0.5% growth, eventually over time, the growth that you will get off this on a projection wise is insane. And this is why trading was the skill set that I honed in on, that I knuckled down on, because eventually it'll click. And you'll think, fucking hell, why did I place all them trades? Like who here is in a relationship? Just hands up. Okay, right? Who here has placed a trade when they've had a Barney with a partner? Right? The emotional side of it is what kicks in. and then you go and you lose a lot of money and then you feel even worse, or you stub your toe. You've woke up on the wrong side of the bed, you've had a shit day, someone's pissed you off. You're in a group chat and it's just flooded with X, Y, Z, and you end up trading based off of emotion. You end up over trading, over leveraging based off of something that's happened that is out of your control. So like some of these slides I've just realized now, they're going to be out of sync because once I get into flow, I don't need this, right? But the key with the trading and my biggest thing was how my brain works when I press buy or sell. That's why this is key. This became my Bible for quite a while. Like I would highly recommend anyone who's not got it, it's 35 quid on Amazon. There's the audio version here. I'm crap at reading, so I'll typically have a headset on and I'll read at the same time like a special kid, right? That's how I feel sometimes. I have to read and listen and write at the same time because my brain doesn't compute a lot of the time. So anytime I'm doing book work, I'll have the audio version as well because the way that my brain works, I'm very kinesthetic, so I like to see it being done and I like to know how my brain retains information. So with this, funny story about this actually, Trading in the Zone tried suing me because I put this on my personal YouTube and it started to get good traction. And the lady who runs all of the Trading in the Zone stuff for Mark Douglas sent me a lawsuit, which was fun. So I had to take that down. So anyone who searched it on mine anymore, it's not there. And if you're watching this back, my bad. So, but basically this here, become a Bible. Read it. The first 17 pages will tell you why you trade how you trade. Straight away. And you'll have the aha moment. Then you'll read another 20 pages. You'll forget what went on page 1, 2, 3, 4, 5. So that there for me, I had to reread that over and over again until the psychology side of it sunk in. This is another great website you can keep an eye on. Again, if you're just taking signals right now, you don't necessarily have to, but we get to a point with this where on Forex Factory, you can see what's going on over and over again. That will give you what we call red folder news, and on there, it will tell you what's coming up. So it'll show you that the US dollar is about to have some XYZ, KPIs, CPIs, all that other shit that goes on that we don't need to know about. We just know what eventually moves the market. So when there's NFP, we know that that can have movement on the market, which is non-farm payroll. So if that comes out positive or negative for the US dollar, we can see a hell of a lot of news. But at the moment, that's not affecting it because there's missiles being launched and elections going on, which takes precedent on how the markets move. So when we look into this currency pair movements, the London session and the New York session, they're typically the most volatile on areas. You'll see that we're going to start sending out a lot of trades before, probably between 6 and 8 a.m., sometimes a little bit earlier, because coming towards the end of the Asia session, that's where the other places in the world are starting to wake up. They're starting to place trades, they're starting to get into the market. The New York session's coming to an end, so money comes out of the market, and then you can just get used to seeing patterns. Again, I'm going to eventually train everyone on this. So you can see where the influx in money comes. Because if you know where the money comes into the market, you just have to get used to seeing where it's going to come out. And then it's just a pattern. Because anything that happens between there and there, you're in certain zones, in certain key areas, and that for me is my style of trading. This will all go into the school. I am going to be launching, like I said, my own app. So that's going to have in there, built everything in. So we're going to have the boot camps and everything in there. But we can dive into on this bit here. Discipline over profits is the key when it comes to this, and you can't go broke taking profits. So a lot of people mention to me like, Bradley, when should I close my trade? Should I close at TP1? Should I close at TP2? Should I close at TP3? When should I close? Because some of you are trading without take profits as well. So that for me is a red flag on both sides because you've not got a stop loss on and you've not got a take profit on. So when do you get out of the market? You then have to make that decision. And if you've stubbed your toe, had a barney with your missus, something has happened, you're not closing that trade. You're eventually just going to be in it, and you're in a position where you start with buys, but then you put sell positions on as well. Who here is at a point on their MetaTrader where it's got sell, sell, buy, buy, sell, 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 buy, 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 sell, 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 buy, 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 sell, 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 buy, 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 sell, sell, sell. And you're thinking, my margin's great, I've got loads of room, but I'm not sure which one of these to close. I've done that where I lost 11 grand doing that. It was great because on MetaTrader it was blue. This is the most confusing part. I was in profit, but I closed one of the trades that was so heavy in drawdown, it wiped my margin out. So I got margin called, all them trades got closed, and because there was swaps, there was commission, there was this, there was that, the account was gone. Within literally, I thought I was doing well. And I looked and I'm like, that makes no sense. Support and Vantage, you've just took my fucking money. Where is it? 20 minutes later, I then knew why. And that was why. So again, don't get into a point where you're putting buys and sells on. You're better off just taking your phone, chucking it in the water for a little bit until James Batchford knows about this, don't you, James? I've just seen you come in. Buys and sells. That's straight on your chest, look. But yeah, that's how you want it to be, is get to a point where the emotion's so clear when it comes to placing trades that you're not having the reaction side to it. So what I'm going to go into here is a little bit on support and resistance. So this, for me, is a very, very good way of trading. I like to think of it like floors and ceilings. So I've just put you a little house there, for those of you who don't understand the floors and ceilings concept. But all I'm looking for on here is for trades in between this zone. This is the last, since April, on gold. So if you can see here, there's key areas that price has respected and bounced off over April, May, June, July, August, September, October, November, 8 months. So if we know that from a monthly perspective and from a daily perspective, it's bouncing in between these ranges, then what's going to happen when it comes to here? This is where gold closed nearly on Friday. It's going to do one of two things, right? Obviously. It's going to go up or down. So it's either going to go above here, break and retest, and go to the top, or it's going to come down. And that is just very, very simple support and resistance. I will do all this on a chart with you as well. Break and retest. I will go through that on a chart with it all on. So this here, understanding what we call lower lows and lower highs, will also allow you to start to get into trades when they're in certain positions. So if we look at this right now, a trade will typically have 5 strong pushes. So you'll see the market move down, pull back up, move down, pull back up. So bearing in mind that this is based on lower lows and lower highs, what would you class this as here? Lower high, right? So if it breaks down, this is a what? Okay, I could do this at the same time. So you've got lower lows, lower highs, lower lows, lower highs, lower lows. So the market will move down. What you will see here is that a lot of traders and a lot of people, they'll try and catch this. They'll try and catch it when it's already moved. Who here has seen the trade move 100 pips and then you try and enter? So like, I always like to think of the analogy of like catching a falling knife. If you're doing some cooking and you knock a knife off, you're not going to think, oh shit. You just move out of the way and you let it do its thing. So you need to get to a point where that's happening. You need to let the trade do its thing, start to retrace, and then this is the entry zone. And for me, this is my way of trading. So you'll start to see potentially in the group over the next couple of weeks, I'm going to start putting some of my trades in there. How I trade, it might take a little minute to get used to, but from a long-term perspective, because we know once the trade breaks, this is what we call like an area here. So once we know that breaks, I'll teach all this in a second, but once we know that breaks, if trade comes back up and we're looking for sell positions, we don't want it to go above that high. If it goes above that high, it's off up anyway. So that's where you'll get used to seeing them trades when the market's moving down. And you'll see it stagger. If we go back to this trade here, so we had the market come up, new high, new low wasn't formed. So this is obviously on other way. I'll show you this on the highs actually. So we then got the opposite side, higher highs and higher lows. So we'll have a strong push, market will pull back down into a higher low, into higher high, higher low, higher high. So I'll show this on charts, but this is how it will work. The market will come down, You'll have a little bit of noise where you're not really sure. And all you're looking for is what the trade does in between this zone and this zone. Does it come down and create new lows? Does it create new highs? Does it create new lows? Does it create new highs? So if you can get used to marking that up on charts, and then we send out a trade, you're going to look and go, that makes sense. If it goes above here, let's say our stop loss might be 80 pips, you might be able to put that at 45. So you've instantly increased your risk to reward. The reason that as a signal, it has to be a little bit broader is just because we don't know when you guys get in. We are potentially going to start, and again, I'd like a show of hands on this. Would you prefer it if we put enter between X and Y? Yeah? So if we said enter between 2963 to 2965 and keep your stop loss here, would that be better for you guys who are placing trades? Yeah. Okay, so then we'll get that done straight away. So then from that perspective there, you know where to enter between. Because what happens a lot of the time, you get to your phone, it's already moved 20 pips. Or it's gone 20 pips the wrong way, and we don't end up placing the trades. We don't end up entering the market. Or we end up entering at the wrong time. So if we know that, this is where the 80-20 rule comes in. That's a move on gold. This could happen over 15 minutes, it could happen over an hour, over 4 hours. As traders, we always try and catch the 100% because we're trying to get the most out of a market. But if we understand that I always think of it like poker. I'm trying to get someone to show me a tell or to show me their play a little bit so I can get a read on whether I need to chuck all my chips in or not. So if you understand that this is like any part of life, any part of business, when you're dealing with anything, the 10% at the beginning, it will show you and confirm whether the trade is going in that right direction or not. Because if you try and enter here and it shoots off, you've just blown your money. So I like to let the trade show me 10% first. I like to then catch the 80%, and I'm not bothered about 10% at the bottom because that's just a bit extra. So again, I will break all this down on a chart for you, but I want to show you this as well. So we can do this now actually on the chart because I can put all of this intertwined into each other, if you will. You eventually want to get to a point where it's called set and forget. So you place the trades. It is. Because once you enter a trade and you know you can go do this, do that, and you're not having any emotion behind it, if you know that the trade was to go and do that, and it gets to, let's smallen this down a little bit, it gets to there, let's say, and we know that that's the previous high, but these are significant highs here where price rejected. This can then just become a very simple sell. Price gets to here, you put your stop loss above the high, you either target the previous low, the previous low, the previous low. So if you know that, okay, you can then jump down into smaller time frames to enter them trades. This is how I personally trade. Why is it right clicking all the time for me? So that there, from a support and resistance perspective, you could enter the trade there, you could enter the trade down here, so on and so on. So as we look into that even more, we have then got break and retest, which is what I was just showing you there. So now we had this zone that price has broken above. So if we know now that price is going to break, it then needs to retest and then push. What a lot of people do is they wait for it to break on a small time frame and then retest on a small time frame, and then it does this. They end up with the trade tanking all the way to the floor because higher time frame biases is what moves the market. The banks, the government, the hedge funds do not trade on 1 minute time frames. They're looking at bigger plays. So what I'm going to share with you now is what I love to, this is my beautiful way of trading. I love this bit. It's called imbalance. Does anyone know what imbalance is before I move forward? Good, 2 of you, brilliant. Imbalance is perfect. So imbalance, if we look at this chart just from here, those who already know, don't mention it. But if you're looking at this part of the trade, this part of the charts here, this is on the daily, so it's a little bit amplified. But what can you see? Is there anything that stands out to you in any of these zones? Yeah, big drops. Anything else? Yeah. So what I'm looking for, imbalance, is this bit here to this bit here. So if you see how the candle ends there, the candle ends there. You've got a gap here where what got put in the market?
Yeah.
This is what they call, this is the money shot, right?
Yeah.
So this bit here, that blue candle is where the banks, the governments, the hedge funds put their money in. What does it also happen to be? You've got on this time frame, support, resistance, right? So you now see support and resistance, an influx of money. Bear in mind this is on the daily, so this is the 27th of September this happens. What did I tell you that banks and governments don't trade with? Stop losses. So what they do is they will put sell positions on here to influx the market down. So then guess what all of us do? No, we go with them, because the money's, once you start to see money flow and the candle starts to go red or blue, whichever way you're doing it, you will also start to place off of that trade. So an influx of money comes into the market, and then they will put 10, 20, 30x that on a buy. So the market moves, but then the market has to complete its pattern. So you'll see the market pushes up, comes back down, pushes up, comes back down, pushes up, right? So now, and again, this is beautiful because it brings it all together. So now you've got this as the last significant high. You've got this as the last significant low. So all of this bit in the middle of here is noise. So now the trade gives us a new high, still the same low. So what are we looking for the trade to do? We're looking for a trade, if we just go on replay mode. Oh, it's not doing that. Go to here then, if you don't want to play ball. I need to exit that, that's why. Exit. So if we go to replay mode, is there a lump on the carpet or something? So if we play that out, that's the new high, okay? So now what we're looking for is action in between here for a trade. If the trade comes down to here, where, you know, up, down, if we based off what we said before, we're waiting for a trade to potentially come back down into these zones to trade back up. Or it breaks down here, then we're waiting for this, and then come back down, which goes back into what we were just trading on here. So we have the move down, and then we start to have the move up. Does that make sense?
Yeah.
Anyone confused as shit? You can raise your hand, by the way. It's good because this bit here, it'll help you understand trading. So, good. And again, if you were understanding all of this after a 1 hour session, I'd be like, man, you're a wizard. Took me a good few years to understand this. So if we now know that we're in a range, higher low, higher high, trade then comes down, what's it done? Broken this. So at the moment that this red candle fully closes on the daily, this is now a new low. So we need to wait for that to happen. But if we look and we delete all of this off, remember what we said we were looking for? Imbalance, right? So it took these, whoever it was in drawdown from the 12th of September until the 14th of November. 2 months. All of the money that they had on sell positions were in negative. So they have to eventually come back and collect that equity. So if you look at a loan, for example, that you've got with someone, I know some of you might lend money before and never come back. With this, they have to get it back. I don't know how we end up in trillions and trillions and trillions and trillions and trillions and trillions worth of debt. I do, but that's another story. So if we look at this, the market took 2 months to come back and collect the money. So if we know that we're trading on imbalance, what can we see here? Right? Another imbalance zone. So again, an influx of money was pushed into the market after what? A buy. So these again, they'll still be in negative equity. These will still be in negative equity. But then we're looking for the last down candle before the up move that broke structure. So in this case, it'd be the last up move before the down candle that broke. So if we look at this here, there was an up move, push down, another tiny little up move. On a 4-hour time frame, this will be perfect. So then we can highlight here and here. So now we've got 2 key zones. We've got extra levels of support and resistance. We're also going into a support and resistance area, right? So now we've got multiple what we call confluences. We're now looking for break and retest, support and resistance. We're looking for imbalance. We're looking for higher highs, higher lows. We're looking for everything to be there that matches up and aligns to a trade. So for me personally, I'm looking for the trade to come back up into this bit of imbalance here because it was the last significant down that broke this structure. So the move got pushed down. So there's money, and again, we can highlight this bit. There's still money up there. Okay, so there's imbalance here, there's imbalance here, there's imbalance here. So if we can see that on a pattern, collects it there, doesn't respect it. Right? So now price has come into this imbalance zone here. So this influx of money is potentially where I'm going to look for next. So now if I was trading this off of a daily time frame, knowing that, I don't want to start throwing fucking 65,000 things at you, but we've now got a new low. This is the high. So what we're looking for is the trade push down to come back up to push down. If it goes higher than here, the trade's invalid. So then I'm looking for me, this is again just how I trade. I'm looking for sell positions, potentially around here, stops above the high, and they're my target zones, right? Down into here, which again will sit pretty with support and resistance. So again, I'm not going to teach you all of this today, but this is where once you start to add up multiple different things, trading's sick, right? And I get a bit giddy with it, it's weird. So if we see now that imbalance zone can potentially react from here, or it goes there. If it goes here, no worries. I'll look to put another sell position up here. And where am I going to put my stop loss? I'm not going to put my stop loss at 100 pips because it doesn't need to be that high. It can just be above here, right? And then I target the lows again. I target the lows of here. I might target there, might target there. But again, based off what I was showing before, my long-term hold is to down here. That trade is a 1 to 17. So then all you get used to doing is, right, that's now the daily. So we've got support and resistance zones. We've got break and retest. We've got imbalance. So they're 3 key things that you want to check when you're placing trades. And again, this might be a little bit too much. This is why I'm going to put all this into a boot camp for you.
I'd go for that. Can't wait.
And it's $1,000 a month. I'm joking. I'm only joking. It's $99.99. You can pay for me to be in Marbella. It's perfect. But this here is why. So once you understand. Has anyone outside of trading ever heard of Fibonacci before? Fibonacci. Okay. So without going too deep into this, if you look at frogs' tongues, if you look at birds' wings, if you look at everything that has been created by meant to be the man above, whether you believe in it or not, I'm not here to tell you to be religious, right? There's Fibonacci sequences that are in place that are to the molecular T. They're to the structure. Like if you look at the pyramid, for example, the width and the dimension of that times the height is supposedly the circumference and the actual thing of the universe, right? So that just shows that there's potentially greater beings that have been here. This is going deep, by the way. But this is where I love to see it, because if we understand that Fibonacci sequences are on wings of bees, they're on wings of birds, they're on wings of this, they're on the tongues of the things that are catching things to live and eat. And that is in fact, I'm going to Google this just so you can see it. This wasn't part of the presentation that I designed last night.